Welcome to DLSN, a podcast brought to you by McGuire Woods. DLSN promotes the advancement of women in private equity and finance through conversations with women in the private equity and finance space. These conversations provide both insights and practical takeaways to inform your deal work and enhance the culture of your organization. If you're ready to drive the industry toward a more inclusive and diverse environment, then it's time to come to the table.
Hello, everybody. Welcome to the McGuire Woods DLSN podcast. I'm Penny Zacharias, a partner in the debt finance group in the Pittsburgh office, joined by my colleague Casey Nelson, a colleague in our debt finance Chicago office. And we are joined here today with a very special guest. We have Mary Ellen Iskenderian, the president and CEO of Women's World Banking. We have a lot of excitement planned today with our discussion, so we're going to jump right in. I'm going to turn it over to Mary Ellen so she can introduce herself before we get started.
Thanks so much, Penny, and thanks for calling me a special guest. I'm delighted to be with you. And as you mentioned, I'm president and CEO of Women's World Banking. I've been there, to me, astonishingly, for 18 years. But I think the fact that we've not only been able to reinvent the organization a couple of times, but also the field of women's financial inclusion, economic participation has changed so much during that period of time and is becoming more and more relevant to more and more other issues has really kept an exciting space to play in.
Wonderful. Well, Casey, do you want to kick things off for us?
Yeah, of course. So, Mary Ellen, we know that your career has really spanned global finance development and women's economic empowerment. And we wanted to first touch on what initially drew you to finance and what led you to move away from what some see as traditional private equity into this space.
So I had been attracted to a finance career really through much of my education and pursued a pretty traditional career route, I guess you'd say. My first job out of college was as a foreign currency trader, which was a huge amount of fun. And it was a tremendous learning experience to really understand how markets worked. I've often said that my family is convinced the only thing I really learned on the trading floor was how to swear really very effectively. And so I think those are good skills for a person to take into a finance career. And then after getting my MBA at the Yale School of Management, I went to Lehman Brothers and had, again, sort of a pretty traditional M&A slash corporate finance career there. But it really showed me the role that finance could play in people's lives and the power of finance to make a real difference. And the story I always tell, always a little bit of an embarrassment that I was as old as I was, as naive as I was about finance and investment banking. But it was a wake up call for me about what I wanted to do with my skills and my career. It was the first deal that, or not even a deal really, but a client engagement where I was not the most junior person on the deal. I had an analyst working with me. And we'd been retained by a trucking company to find them an acquisition candidate. And we were putting together a bunch of pro forma balance sheets for client, and we were going to go visit them in a couple of days. So I went to check on how the analyst was doing, and he had done a great job in laying out these balance sheets. But I saw at the bottom of each potential transaction a plug figure. And I asked, what are you doing to make the deals work out? And he said that, well, those are the number of people who would have to be laid off in order for the deal to really work. And it was just such a wake up call for me that I just didn't want my work in finance to be, contingent on on layoffs and that kind of change in people's lives. My undergraduate's been in development finance, so I'd always hoped that I'd be able to apply my skills to the developing world. And so on another transaction I was staffed on, I had the great good fortune of working with the person who had run the Young Professionals program at the World Bank prior to joining Lehman. And she sort of got to be friends on the deal, and she heard me talking about some of my misgivings about finance and said that she'd support my application to the Young Professionals Program, I was very, very fortunate to get into the World Bank through that route, and then really got to pursue a very different way of working with the financial sector in the furtherance of different kinds of goals through finance.
Wow, that's incredible. And I have to ask, as a trader, how many women were on the floor with you? You know, how many of you guys were there?
That's such a great question. There were three of us.
I'll be happy to report to my 5-year-old and 2-year-old that my cursing is my experience in the finance world. So at least now I have something to blame it on.
Mary Ellen, could you describe for us the mission of Women's World Banking? We know the organization was founded decades ago, but would love to hear some history about how it became an asset manager in addition to being an NGO, and, more specifically, what impact you can have on communities that you serve and the organizations that you work with.
Oh, I love that question because it really does, it kind of encompasses our history, as you say. So I think we have a great origin story. The first conference on human rights for women was in Mexico City in 1975. And a lot of really iconic women's organizations were sort of birthed or came into being coming out of that conference. As it turned out, there were a group of women who, sort of quickly realized that if women didn't have economic rights and didn't have access to all of the same tools that men did to achieve all of their aspirations and all of their goals, they really couldn't have the full complement of human rights. And so a very dedicated core of 4 women came together coming out of that meeting. And then in 1979, the entity that we are today, Women's World Banking, was born. I think it's always so important to realize that, when they were talking about this, just a year before, 1974, was the first time that a woman in the United States could get a credit card or a loan in her own name that her husband or father or some other man didn't have to sign for. So for them to be thinking on a global scale about women's financial and economic rights when they were just coming out of that themselves was, I think, really, really quite prescient. But from our very founding, we were about providing all women with access to the full range of financial services. The original vision was to raise a sort of corpus of capital that could stand behind any woman business owner that was denied a bank loan. And the idea would be that Women's World Banking would stand behind her as guarantor. And we did a lot of that work in the early days, but it was kind of just getting started at the same time that the global microfinance movement was really taking off. And so many of our original founders, most notably a woman by the name of Ela Bhatt, who was the founder of SEWA, which is really one of the oldest women's economic rights organizations, an Indian organization, were saying, hey, there are these microfinance organizations, many of them founded by women, but which are serving women with financial services. Why shouldn't we be working with them as well? And so over, I'd say, the next maybe 20 years of our history, we were almost a membership organization, if you will, where we were providing services ranging from, leadership development services to some financial consulting, to a full range of services to these organizations. First, starting with organizations that have been founded by women, moving on to then organizations that may not have been founded by women, but were committed to serving women. And that was very much in our model. I joined the organization in 2006. And as it turned out, it was only a matter of months later that the first digital currency, M-Pesa, in Kenya also debuted. And it became so clear very early on that digital financial services were the way that we were going to get last mile services to the low income population. And so it just became very clear to me that we needed to start talking to a much broader array of financial service providers than just the microfinance institutions. And frankly, unfortunately, the microfinance sector was very slow to recognize the impact of digital. But within a few years, we found that it's important to be talking to major banks, fast moving consumer goods companies, fintechs, insurance companies. Today, fully a third of the organizations that we're working with directly to deliver financial services and not just credit, but savings, insurance, payments to low income women are fintechs. And so that wider playing field really was quite exciting. It also made it clear that there were lots of businesses that weren't getting capital that could be real conduits to greater financial inclusion by women. And so instead of just providing support to these organizations in the form of capacity building or technical assistance, coming out of the International Finance Corporation at the World Bank, which has an investing model, I managed to convince the board of Women's World Banking to allow us to start taking stakes in some of these institutions. And so our first fund, hardest money I've ever raised in my life, $50 million, was invested in 10 microfinance organizations. Our second fund, I think, is actually the more interesting of the two, given we've raised more money, so $103 million, but we're investing in a much broader array of financial service providers. And to your question about, what impact you're able to have, we're kind of agnostic about founder. We'll work with male and female founders. But what we want to make sure is that these organizations are gender diverse, because we see the clearest way to serve more women customers is by having more women throughout your organization, but then also reaching women in the market with the full range of tools and financial products and services, and then financial literacy that goes alongside that as they possibly can. And by acting as an investor, sitting on the board, in a couple of cases, we've led capital rounds. And so all of the investors coming in on that capital round are pursuing the same gender focused goals that we are, is really powerful in changing the way companies think about serving women and actually accomplish that goal.
That's incredible. And I think, so many of us take for granted that an asset, that having access to something as simple as a cell phone and how having access to one opens so many doors. So we would love to know, in your time as CEO, are there particular milestones that you've accomplished that when you look back at your time at Women's World Banking that you are most proud of?
Oh my goodness. How fun to get to talk about my, my babies. I think one of the things that we're going to be hopefully celebrating in just a couple of months, actually, we launched a really, really ambitious 10-year strategy in 2018. And I think, at the time, I really think the staff and I saw this an aspiration to reach 100 million women with a financial product or service that they didn't previously have access to. This was at a time when fully 1 billion women around the world were completely excluded by the formal financial sector. We felt it was important to put a marker down. So 10% of that number felt really exciting. But the thing that we're just thrilled about is, as of end of 2024, December, we had reached 86 million women. That's been since 2018. And my team in India tells me that we are on track to cross that 100 million women threshold. So that I think being able to say it is possible to reach women at scale with products and services that not only meet their needs, but are financially viable for the banks and fintechs and insurance companies that are working with them is really such an important milestone for women's role banking. And then I think the other one that I'm so proud of is what we were talking about just a few moments ago with becoming an asset manager. So taking those direct equity stakes, not just providing advice. Of course, advisory work is important, and we've accomplished a great deal, both advising financial service providers as well as providing policy support and advocacy. But the change that we can drive as an investor is quite impressive, and something, as I say, I'm really proud of.
Yeah, well, you were talking about the evolution of the organization a little bit earlier. And one thing we wanted to explore with you a little bit was just the innovative aspect of it. We know that fintech has played a transformative role in expanding financial access. So we were hoping you could talk to us about what innovations that you see as most important, and are there any new initiatives or developments specifically you're excited about?
Absolutely. So Casey mentioned the role of the cell phone, and I don't think that digital technology and its impact can be overstated. I'd say financial inclusion is maybe one of the few silver linings from the pandemic because it really brought numbers I've seen are 250 million low income people into the formal financial sector, really through digital tools only. The most remarkable story, I think, is in India, where the government made, I think, a very bold decision. The first set of relief payments right after that first lockdown 5 years ago, India said relief payments are payable only to women and only digitally, only through their cell phones. And so, in a matter of weeks, you had 25 million new bank accounts opened through digital technology. And I think the exciting thing is you're seeing that those women have stayed. That it's not like the accounts were open and then once the pandemic was behind us, they've left the system. They've stayed and they've continued to engage and use a broader range of services. I think one measure of this is when the Sustainable Development Goals were first announced in 2015, financial inclusion and being able to access financial services were linked to 7 of the 17 goals. But as the trajectory towards the goals has evolved, that's really turned into 13 of the 17 goals are dependent or rely on or are enabled by the ability to gain access to finance. And I do believe that that's solely because of digital is making the services cheaper, more accessible, allowing more players to come into a market to serve those customers. And so I think now that we've got cell phones in more women's hands, we have to be very cognizant. There's still a gender gap. There's a 15% gender gap in the emerging markets for smartphone ownership. And so we need to make sure that we're getting handsets into as many women's hands as possible. But then once they have the phones, making sure that they're confident in navigating the phone and using it. So really any product that we develop alongside of financial service providers, we make sure has an element of digital and financial literacy attached. We also have to be careful that as AI becomes the dominant force in digital technology, that women don't get left behind or inadvertently excluded. So one of the things that we've become very engaged in and is quite interesting is looking at credit scoring algorithms and seeing, is there any unconscious bias here? We don't typically see actually explicit bias where women are, not considered by the algorithm. But by the same token, we're seeing things like one of our investee companies is a finance company that does huge business in financing two-wheelers, which are a very important way for people, particularly in rural areas, to get around in India. And they noticed something really exciting that women were 2 to 3 times more likely to want an electric vehicle than men were. So they really wanted to boost their financing of electric vehicles to women. And so we started taking a look at their loan book, and sure enough, the majority of their lending was going to men. And so they asked us to take a look at why that might be. In that case, we didn't even have to go as far as the algorithm. We looked at their application process, and they literally were asking for things, documents, kinds of identification that women in India do not have and are typically maintained in a husband's name. And so maybe they could get a loan, but if you look at the application process, it had to have, the husband's signature or be in his name. They weren't even getting their own credit wasn't even getting into the algorithm. They weren't even getting past the application process. And so we helped them rethink how are they even thinking about that pipeline and how are they trying to get more women into that pipeline. So sometimes it can be very, very basic. But if you don't know what you're looking for, if you're not looking with that gender lens, you're not going to be aware of what you might inadvertently be doing. So I'm very excited about the opportunities of AI to deliver more financial services, to make more remote work available to women. There's some really powerful data coming out that women will choose a remote opportunity over a workplace that is primarily female and a workplace that is primarily female and will pay them more than they're currently making. That being able to have the flexibility of remote work is really important. We're also seeing AI sort of opening up no code or low code job opportunities for women. So being able to create new job opportunities for women, if we're looking in the right places, is super exciting and only going to be possible through these new technologies.
Wow, that's incredible. Most of our listeners are women in finance, and we so often rely on numbers or stats, right, to do our jobs. And I think it's so interesting, incredible that you're questioning the basis for some of those algorithms. And I hadn't even thought through that the basis for some of the stats that people are looking at might be based on biased information. It's such an interesting and frankly concerning, but it is great for folks in all of our industries to really question where their information is coming from. And so on that note, we wanted to touch on what are some of the biggest misconceptions about financial inclusion for women?
Well, I think there's a biggest myth, and really, I think when I think of what my job is, it's busting this myth, and that is this misconception that low income women are not a bankable, viable customer base. And that it might be a good thing to do in your CSR portfolio or through your charitable operations, but to think of designing products that meet their needs, that are priced and packaged in a way that is accessible and understandable and affordable, that's not worth the effort. And so the fact that we are right in there alongside financial service providers, trying to change their minds is really what we're all about. We just worked with a really interesting project in Mexico. There's a company there called Mercado Libre, which many people might know, sort of the Amazon of Latin America. And they wanted to do a couple of things. They wanted to bring more women customers onto the platform, first of all, to be sellers. They wanted to direct more credit to the women who were already on the platform. But then the third thing they wanted to do was they had this vision or this view that women had higher rates of non-performing loans. So they wanted to reduce the number of non-performing loans to women. So they were collecting something like 2,300 data points on as they made up their credit algorithm. But what we found there, and unfortunately we find this in so many places, all of this great data, all of it gender disaggregated, but then they don't really look at it when they make financial decisions. And lo and behold, there was not underperformance in terms of credit portfolio quality amongst women. So just like right off the bat, one of their third goals was really not even correct or supported by their own data. So one of the things we just evangelize about is collect it, analyze it, and then use it to make decisions. And then the other thing that I think is part of that misconception about this not being a viable customer base is that you've got to communicate with women differently than you do with men. And we've consistently found that they do take more time to make financial decisions and they want more information to make those decisions. But then once you've built their trust, once you have them as a customer, women are much, much more loyal customers. We see that in our investment portfolio. Customer retention rates are much higher amongst women. The data here in the United States that women are 60% more likely to be a client 5 years after they've signed on with you than a man is. A man is much more likely to kind of shop around for the the best deal, whereas women are much more relationship based in choosing a financial service provider. And so I guess I'll just sum that up with yet another number is that there is Oliver Wyman estimates that there is $700 billion in annual revenues that the financial service industry, so banks, insurance companies, asset managers are leaving on the table. 700 billion every year just because they are not banking or serving women at parity with men. There is a really strong case to be made for serving women as viable customers. And that's kind of the biggest myth that we're out there to clear up.
That's a big myth. Well, you've given us just in that response a lot of good reasons for gender focused investment strategies. And I think another question that a lot of our listeners would be very interested in hearing about is advice you would have for women in finance and private equity who want to advocate for these types of strategies.
Oh, those are my allies. Again, our portfolio data and so much research that's being done by all kinds of institutions that are focused on real financial performance is that having women throughout financial service providers. So as I said earlier, not just at the top of the house, but throughout the business is the clearest and easiest way, really, to attract more women customers. And I think that goes from everything to involving them in the product design, involving them in the messaging. We've just so consistently seen that, women respond to messaging that refers to other women, that places them within a community of women. Women are much more sensitive to referrals by other women. So if you've got women either in the financial sector or who are happy with their financial service provider, a reference from one woman to another is going to carry much greater weight than a reference to a man, quite frankly. And, we also know that given that leadership makes such a difference, I think it's really important for women to be for all people to be conscientious consumers of financial services. To like, do you even know the makeup of the board of your insurance company? And like looking at who is at the top of the house, who's running the business that is in charge of your finances can make a really important difference. And then the last thing that I'll say, and this again is for men and women, the importance of getting financial literacy to kids as young as possible. There are some studies that say starting at the age of 5 is the most impactful to have kids really understand the financial choices they make, how to steward their money, how to budget is really critical. And those are important things that people can do, right now in their own lives.
Well, as a mother of a 5-year-old, that's a really great idea. So, Mary Ellen, a lot of our listeners are women from more traditional brick and mortar financial institutions. And we thought it would be interesting for us to ask you, is there more that people at those types of institutions can be doing to make themselves more accessible to women in emerging markets?
Oh, that's a great question. I think at this point in our history, just getting good information, understanding that there is so much more that we share than that divides us. I mean, there's so many experiences that women have related to me over the years. I've been, so privileged to travel around the world and meet so many extraordinary women who can so clearly articulate what getting access to credit, or even we've been working in Cambodia with the largest digital wallet there. And they've kind of been going to factory workers. Cambodia made it a requirement that if you were going to open a factory in one of their free trade zones with very lucrative terms, you had to deliver salaries digitally. And so this wallet was really, I think, very responsible and wanting to do that in the most well thought out way. And so we worked with them to to design financial literacy. What did it mean to have your salary delivered on your phone? Pretty much all of the women that were working in the factories that we were engaged in were sending a pretty significant portion of their savings home to family, we found out that they were always concerned when they were sending cash, or even sometimes if they were sending something digitally through a third party, did it make it to the family? Did they have a way of tracking that? And so just the ease and, sort of seamlessness of being able to literally make a payment through your phone not only freed up a lot of time, they didn't have to wait online anymore to either get their salary payment or to then make that remittance back to their families, but it also made them very keenly aware of money that was left over from their remittance. And what was really powerful was the number of women who, yeah, today they were factory workers, but the number one thing that they were saving for was to start their own businesses. These were entrepreneurs in training, and they were really empowered by that. But I also think the thing that, again, so many women that are in your listener group, I think, can share with the women that we're serving is that sense of self confidence, that sense of being, when you're more in control of your money, you are more listened to perhaps by other people in your household about financial decisions. So many women reported that their husbands listened to them in a new way and allowed something that they felt strongly about, decisions around kids in school or which school. We see the data tells us that when women have more control over the family's resources, more people in the family eat nutritious meals. So I think just recognizing what the women that may be listening to this podcast share with women in very, very different circumstances, both economically and geographically, is such an important thing we can add to the project of peace, the project of better understanding of us as the world gets smaller and smaller.
Well, and I think too, Mary Ellen, that goes back to what you were saying about, women being a smart investment versus just being a charitable one.
Yeah. Yes. Yes.
Well, Mary Ellen, I want to thank you. We've had such an enriching conversation, and thank you for sharing your perspectives and your expertise in this field. I think it's really great to get different perspectives and learn something about this field. I think a lot of our listeners are interested in learning more about it too. So, one final question for you. We like to end on something a little bit lighter, if you could. If you were to meet your younger self for a cup of coffee, what advice would you wish to share with her?
Oh, wow. That's a great question. I think I was always, I think, a good colleague at the World Bank for other women. I mentored a number of women and I tried to be really supportive. But I'm still to this day a little embarrassed that, I never asked a banker that I worked with or an insurance company or a private equity fund that we invested in. I never asked them, how many women's businesses are you funding? Do your women borrowers have better repayment rates? Are they better savers? I really never brought that kind of lens to my work. So I think I would try to advise my younger self to be thinking about how does this make a difference in women's life at every point in your work. And all you need to do is ask that question, and it just becomes immediately apparent. There may be a different approach you can take. There may be a different way you can design a product or pitch a product. As soon as you ask the question, how might it be different for women? I wish I'd known that when I was younger. And so if I get a chance to redo, thanks to you, that's what the advice would be.
That's great advice. Just always looking at it that way, but benefit of looking back, I guess. Well, thank you very much. We are ready to conclude. We very much appreciate your time and participation in our podcast.
Well, thank you so much for having me, Penny. I hope your listeners have some value and maybe start looking through that lens themselves in their lives.
Thank you for joining us at the table for this episode of Deal Us In. If you have a recommendation for an inspiring interviewee, a question you'd like us to ask, or topic you would like to hear covered, or if you'd like to tell us about women-focused initiatives in the field, please email us at wpef@mcguirewoods.com. We look forward to hearing from you. This podcast was recorded and is being made available by McGuire Woods for informational purposes only. By accessing this podcast, you acknowledge that McGuire Woods makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in the podcast. The views, information, or opinions expressed during this podcast series are solely those of the individuals involved and do not necessarily reflect those of McGuire Woods. This podcast should not be used as a substitute for competent legal advice from a licensed professional attorney in your state and should not be construed as an offer to make or consider any investment or course of action.